Hey everybody, it's Pete. How's it going? Today we're going to be creating a trading game plan for Thursday, June 10th, 2021. We're going to be first going over the market and the big dud that the market, and specifically the SPY ETF, has been at new all-time highs. We're going to break down the sectors and find the one sector that actually lit it up today amongst a bunch of nothing, really. We had a couple of really good entries in what was the strongest sector coming into the day. We bought some energy stocks that kind of fizzled out, but I would take that trade 100 times out of 100 because they were great setups, and that's really what we need to focus on first. Then we're going to work our way into the cannabis sector. We have one stock that is showing bullish order flow. It's going to be on our top list of stocks to buy tomorrow for Thursday. Stick around and we'll be right back. Okay, so we're going to get right into it. We're actually going to head straight over to the charts. But before we do that, I just want to give a little bit of a trading lesson pretty quick. And it's really about managing winning trades. We spoke about yesterday that we have the best problem in the world right now, which is determining what is the right way to manage winning trades while the market's kind of in a funk. For lack of a better way of putting it, it's kind of laissez-faire, apathy. There's really no. Here's the way I worded it today in our community. This is the least interested new all-time highs I think that I've ever seen. Somebody in the community had mentioned that maybe fund managers are waiting for all of the talk about inflation to get a bigger pullback to buy. The challenge they're going to have with that, though, is if the bids come in and hold. Remember, we talked about this yesterday. You push up and pull back. That's known as a pullback. You push up and go sideways. That's called holding the bid. Right now, the SPY, despite the fact that we sold off this afternoon, despite the fact that we haven't pushed through, we're still one half of a day away from making new all-time highs again. So we're not exactly crashing. So the problem they're going to have is if they're waiting for that big pullback, the bids hold and we take off, they're going to have a hard time explaining why they didn't allocate capital at all-time highs by saying, I was afraid I was waiting for a pullback. So the conversation that we've been having is whether or not we should be booking profits quicker and how to do that. So if you're having that same challenge right now, there's really a kind of a catch-22. We know that we need to have risking one to make three, a minimum, right? We have to justify risking that one because we believe we'll make that three, which is building that argument for the trade, which is what we do. If you subscribe to the channel every day, which I really hope you do, it would mean the world to me. And hit the alert button so you get updates. The whole point of what we're talking about every day is if we build that argument for that three, that's going to pay for all those losses. A lot of people have the mental block that losses are a bad thing. Losses are nothing more than a business expense. They're part of what we do every day, but you need to make the three. You need to make some revenue to pay for those losses. So if you have in your mind as a trader, losses are a business expense and you need to be in business long enough to know how to scale your business, then trading and trading losses are actually, they still stink, but they don't hurt as much because you realize that it's paying the electric bill. It's paying the, it's the same thing as like buying inventory. You put money up, you buy, you buy all the stuff you put on the shelf. That's the same thing as a trading loss. You have to accept the fact that you're going to risk money. But here's the challenge, and this is what we're talking about right now. If you buy, like we had a trade today and yesterday in FANG, entry immediately moved $4 in our favor. Now you have this conundrum that do I take the quick $4 that we had in basically a day and a half, or do you hang on a little bit more because of the risk that you had to take? And kind of the consensus that we came up with right now in a perfect market, which we're not in a perfect market right now, although we're sitting at those highs, is to book some of that profit up into that level and then discipline yourself to hold the balance with some sort of trailing stop. If the market conditions follow through, don't cut those profits short. Keep as much size as you can, maybe even multiple positions looking through that level. So we're going to head on over to the charts. We're going to take a look at the SPY ETF, and this is really what I was talking about. If you happen to not be a day trader, this is what we're talking about in the afternoon. We sniffed all-time highs again, pulled back, went sideways. It looked like we were going to catch a bid here again, rolled over. But from the bigger perspective, we're still there. It's a 3-day trading range right in front of all-time highs. If you didn't know all of the macro stuff that was going on right now, you would think, okay, this is awesome. We're still pausing. Volume is decreasing while we're pausing. That's exactly what you want to see. But then you work your way over into the bigger list, and I showed this yesterday, the bigger list of ETFs, and everything was pretty much sideways to pointing down to melted candles, except for over here, which is the XLV and healthcare. So the healthcare was the shining symbol of what we were looking for. So what does that mean? Does that mean that we can't get in there and size up? Does that mean that we can't get in there and feel conviction about our ideas? It certainly means that I'm in there with less share size. I've lowered my position sizing, maybe taking a little bit more of a cash flow mode than a building a position mode, but I'm still confidently trading. And here's the thing. If you don't have confidence in the idea in the first place, don't put the trade on in the first place. But with the current market condition, you could still go in that direction. Be confident on the trade. Just lower your position sizing until the picture starts to clear up and we start to see more well-bid candlesticks, higher highs, higher lows, closing near the highs. We're not seeing that right now, despite the fact that the long-term uptrend is still valid. We are far from even a potential change of trend, never mind a change of trend. So keep the bigger picture in mind. Working our way over, again, we just showed you the sector rotation and how we're not really performing perfectly by any stretch. If we work our way over, energy was at the top of the list, melted right back down into the middle of the list. And I'll show you a couple of those stocks in a second. But healthcare now has worked its way. But again, I talk about this every day. You need to do this every day. So you're spotting order flow, whether it's valid, whether it's great, whether it's there, whether it's not there. And right now, the picture is different from what it was Sunday afternoon coming into Monday. So we're kind of pulling back on the position sizing and maybe even a little bit less positions in general. So I just want to say this very clearly. This is what separates. I'm a chart reader and I could read every pattern from I'm a trader who's trying to make money. Traders aren't trading to be right. We're trading to get paid. Sometimes we're trading to make a living because that's all that's available. Sometimes we're trading and buying stocks to make a killing because there's more available. Right now, we're a little bit more cash flow mode. If those trades work out, great. We get a head start. Maybe we look to book profits. Maybe we look to add. However, if we put those trades on and they pull back, be disciplined. Keep your losses reasonable. This way you don't dig yourself into a big hole. And when you finally come out of it, then you're making money and you're just getting back to zero instead of managing the downside and then getting back to positive, which actually, speaking of order flow, we're going to jump right over into the stock that we talked about at the start of the call, which is Tilray. A couple of stories about Tilray. First, looking to keep growing. That the merger that has been waiting for a while, the stock that they merged with was APHA, Aphria, I guess it's called. So that's out of the way. And now something else, actually just yesterday morning, actually, they announced a new product. So that's exciting. That's exciting news. So, of course, what are we going to look for? We're going to look to see, is order flow stepping up? Is bullish pressure coming into the stock, despite the fact that we're in this little bit longer term downtrend? And I just realized I wasn't sharing the screen. So let's let's go back over to that. So again, the merger is done. New product. What does that mean? Now we see stepping up. Heavy volume came in after this big downtrend, stopped the down move. That's what we're looking for. That's the first sign of order flow. Pause on lighter volume, rally on heavier volume, pause, rally again. Order flow is starting to step into Tilray. Is it working its way over into other cannabis stocks? Not really, not yet. So we're just going to be stock specific on Tilray right now. So CGC, getting bigger volume, but we don't want to see heavier volume during a pause. We want to see a rally and light volume, a little bit heavier. If CGC, no pun intended, lights up tomorrow along with Tilray, if we get some follow through, then we're cooking with gas. And if GRWG, which many believe is the leader in this group here, actually catches a bid as well, we could be in good shape. But as of right now, those, actually, I want to come back to the screen real quick. We talked about this quite a few times in the video. I make sure that we look at sector rotation. We say there's the market, the industry group, then the sector group. What we're talking about now is the sector group or industry group part of the equation. So put those three stocks, CGC, TLRY, and GRWG. There's a few more, but start with those three. Put them in a watch list and watch them together. If all of them light up green from a net change perspective and a change from the open, that's when you know order flow is going into those stocks. So Tilray is starting that move on good news, and we're going to be watching that for a move tomorrow. And remember, we've been calling out a lot of good ideas this week. So, gosh, please click down, subscribe, ask any questions you have, leave a comment below. I get back to you as soon as I can. I want to help you. All I need you to do is participate and make sure you hit that bell too. That's where you get the updates. So that's the first part of setting up the ideas. The next one we're going to roll over into, we'll talk about the meme stocks in a second, but now we're going to roll over into crypto and crypto stocks, specifically Mara and RIOT. Last week and early in the week, we gave the exact levels that I'm watching in those stocks and did nothing until they hit those levels. They got there today. So let's actually take a look at that. And we're actually going to first start out taking a look at Bitcoin, which did not really look that great. Oh, that's not Bitcoin. Bitcoin coming into the day. We're actually going to go to the continuous contract. So we actually bounced. We got close down to 30,000, and we actually now have well bid into another well bid candle. So as of right now, it looks like a short-term bottom. I'm not going to get excited until we get over 40 again. But as we mentioned early in the week, we are looking at Mara. We needed to get over this 27, 28 level, and RIOT actually did break the level over 31 that we were looking at. Now it's actually trading up another 2% at 32. So both of those stocks broke the levels that we were watching. And this is really trading at its highest level, where you are scripting what you plan to do and you don't do anything until it actually happens. Both of them woke up yesterday. Bitcoin woke up a little bit. Now they're on my radar again. Very similar to the conversation we just had about buying Tilray stock. All right, moving on over, we just showed you the sector rotation and the stronger ones. Lilly is actually at the top of the list, an absolutely perfect optimal entry after the explosion, paused, rallied again. We're looking to continue watching Lilly. Along those same lines in healthcare, Moderna actually setting up another entry for tomorrow. Again, another optimal entry. And NVAX. NVAX is a little bit extended at this point. So NVAX would be what we call a bullish echo, where it's extended too far to initiate a new swing trade. However, because it's still obvious, I'll be willing to day trade it tomorrow, provided the order flow still meets the tape reading criteria that we normally look at. Moseying our way over into the meme stocks. GameStop actually had earnings after today. We actually had two different stories. Earnings came out, obviously, for a $300 stock, what they're doing, it wasn't good. However, it's down $18. It was down 30 before. Then they announced some news about hiring somebody from Amazon, which is actually really good news for them. So we'll see how that affects the stock. But it will be volatile again tomorrow. Some of the other meme stocks that we were watching, AMC really has not been able to catch its footing again. Keep it on your radar, though, as well as BYND. So these meme stocks, Reddit stocks, whatever you want to call them, out of the three of them right now, from a pure technical perspective, GMC, AMC, or BYND, I actually like BYND if it trades back above that 152, 153 level. If it rolls over, going to leave it alone. Three other stocks I want to make sure that I mention today. Net will be at the top of my list today. Really good momentum pause and then rallied and then paused again after a bullish gap. I'm going to keep an eye on that one. IBM, we called this one out on Monday. Hopefully you're watching IBM and got involved in this one on Monday, maybe a little bit longer term swing trade. And last but not least, one of my favorite setups that I mentioned again, a strong stock with a weak close. So I'm looking for a lower opening in UPST tomorrow to find buyers and then rally back up and start to hit over that 170 level again. So TLRY, one of the biggest ones we're looking at tomorrow, because order flow started to step in, and this is really why you got to run. Remember, I told you that, and I'm teaching you all week. Make sure that you run that order flow scan, which means you're looking at stuff that did more than normal volume, and then you go into the charts, very similar to what we've been doing this week, and we've been catching some moves before they got into the public light and attention was on them, and that's what it means to be on top of your game. And I really hope that I'm helping you prepare for that and structure what you're doing. And if you have any questions, like I said, click below. First, click the subscribe. That would mean everything to me, because that means that I'm actually helping. Click the alert so you get the notifications when new videos come out. And please, I can't stress this enough, I want to help you personally. Click down and leave a comment. Let me know what your obstacles and challenges are, and I'd really, really love to help you. So make sure you have Tilray stock on your watch list for tomorrow. Let's watch it together. We'll see if that bid follows up. Remember we said before about pushing up and pulling back versus pushing up and going sideways. If we go up and go sideways and maintain the buying pressure that we saw today, they're holding the bid, and that's going to be great for that stock. And we can start to dig in and start to build a position, looking for a head start and then a spot to add to it. So have an awesome, awesome day. I will speak to you soon. Thank you so much for joining me today. I really appreciate it.